Good morning and welcome to the Economic Times 7 at 7, your daily news capsule to get you clued in for the day. It's Wednesday, the 23rd of October, and I am your host, Bhaskar Dutt. Starting with news from the world of global banking, HSBC has announced a major restructuring, splitting its global operations into two geographic regions, East and West. This move, led by new CEO George El-Hedary, is designed to streamline the bank's structure and focus on core business areas. The East-West division aligns with HSBC's strategic pivot towards Asia, where it generates most of its profits. The split will also include a reorganization of existing business units and a cost-cutting plan aimed at improving efficiency amidst geopolitical challenges. The bank has also named Pam Kaur as its first female chief financial officer, marking a significant milestone in its leadership. Social media and security are terms which are often at loggerheads with each other. It's a constant fight to align the two. In the latest such attempt, Meta has restarted its facial recognition technology to combat the growing issue of celebrity bait scams. This tech will be used to identify unauthorized and misleading use of celebrity images in online ads, which trick users into clicking on fraudulent content. The move reflects Meta's broader efforts to clamp down on deceptive advertising practices. This follows the company's previous decision to halt the use of facial recognition on its platforms in 2021 amid privacy concerns. The reintroduction will focus on safety and user protection. Meanwhile, global institutions remain upbeat about India. The IMF has upgraded India's GDP forecast to 7% for the fiscal year 2024-25, a 20 basis point increase from its previous estimate of 6.8% in April. This revised forecast is attributed to improved consumption prospects, especially in rural areas, and robust domestic demand. India's economy expanded at 8.2% in 2023-24, surpassing the 7% growth rate in 2022-23. India's central bank now has firms with overseas operations under its scanner. The Reserve Bank of India has mandated that corporations report overseas employees exercising stock options. This new directive will impact schemes like share appreciation rights and those where trusts hold securities for non-residents. It's a move to enhance transparency in how companies handle stock-based compensation for their international workforce, ensuring better governance in foreign shareholding practices. The FPI flight from India continues. Foreign portfolio investors have pulled out a staggering 83.6 thousand crore rupees from Indian markets this October. This marks a record-breaking sell-off, driven by concerns over slowing earnings growth, higher global risks, and an oversupply of securities from domestic IPOs and QIPs. Indian mid-cap and small-cap stocks were hit the hardest, with many investors fleeing to safer assets like gold. On to some M&A news. Adani Cement, through Adani Cements, is acquiring a 46.8% stake in CK Birla Group's Orient Cement for 8,100 crore rupees. This deal intensifies the competition for market share in India's regionalized cement sector. Ambuja will further launch an open offer for another 26% stake at the same price, with the transaction fully funded internally. This is part of a broader consolidation trend in the Indian cement industry. Here's the latest on India's biggest media deal. Reliance Industries and Disney have agreed to divest 7 TV channels, including Star Jalsha Movies and Colors Marathi, as part of conditions imposed by India's antitrust regulator. They also pledged to stop bundling TV and OTT ad slots for cricket events like the IPL. This is part of a larger $8.5 billion merger between Viacom18 and Star India, aimed at creating the largest entertainment entity in the country. That's it for today. Grab a copy of the Economic Times for more news and analysis. This is your host, Bhaskar Datta, signing off. Have a good day ahead.